Everybody, we're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leverage Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. That way you're notified of whenever we release new videos. We release videos every night throughout the week and once on the weekend. So make sure you hit that notification bell. That way you get the weekend notification, because it can come out on Saturday or Sunday, just depending on what I have going on. But those are the important ones to get your trading plan together for the full week. Make sure you're following us on X at Bullish Chips. That way you can stay up to date with our entries and exits for not only our scalps and day trades, but our mid and long-term swing trades as well. We also offer other commentary throughout the day, information about like the internals for QQQ, notes that we have on price action for SOXL, and just anything else that might help your trade throughout the day. Make sure that at the end of this video, if you like the video, hit the like button. It helps spread the word about SOXL. It's one of our favorite tickers to trade, so we just want to spread the news. We also feel we have a great trading methodology. It's proven, it's repeatable. It can be applied to any ticker symbol, but we're just focusing in on SOXL on this channel, so just want to help spread the word. So without further ado, let's get into the charts. That's what we're all here for. Just a quick rundown of what we'll be going through on the video today. We'll go through and break down today's price action, zoom out a little bit to look at things from a little bit wider perspective, and then at the end of the video, we'll get into our notes with our triggers and targets for tomorrow. If you are new to the channel, make sure you check out the description for this video, where you can find links to some of our other short videos, like about how we set up our charts, so that you're familiar with the color coding that we have going on in our charts here, and just have a better idea of how we have our chart set up. Also, one of the main parts of our trading strategy is based upon the strat, which was invented by Rob Smith. He's no longer with us, but his YouTube page is. So I've also provided a link to his YouTube page in the description of this video as well. Go ahead and check that out. There's also plenty of information about Rob on the internet, so make sure you check, do your own research on Rob as well, and determine if the strat is something that you may integrate into your trading plan. Just a reminder, we're not financial advisors. We don't offer financial advice. We're just offering our view of price action for SOXL in the current day, in the past, and where we think price action will go in the future. So let's get into the charts. We're looking here at the day chart. I wanted to start here like we do most days, but just to kind of look at the things from a strat perspective. Last night we talked about how we got the 3 2 days ago, a failed 2 down on yesterday, and we were looking for the 2 up with a clear entry at the high of yesterday and a magnitude of the high of the previous day, which is the 3. So we ended up, we swung a couple of runners that we had yesterday, and it opened gapped up, so you didn't have a chance to enter down here. You had to be in from yesterday, but we did get the gap up, opened almost at the magnitude of the move. It did poke above, so we got a higher high on the day perspective after a higher low, so we've started a daily trend back to the upside. But it did fail at that point, which is fine. All we were looking for was the 3 2 down 2 up. It ran that. That's what we wanted. We ended up selling, I think, 2 minutes into open today. Remember, if you follow us on X, you can get our real-time updates of our entries and exits. So we got out of our calls that we swung, and if we break down to the 15-minute real quick, we'll see that we got basically an equal high, and then a breakdown, of the gap up exhaustion, basically is what it was. So it kind of flushed back down the thin structure that we had here. If we look on the 5-minute, it's a little bit better. Yeah, so we did get the higher low essentially from yesterday, a higher low, higher high, higher low, but then we got the lower high here, and we got a double three. So once you have a three reversed by a three of another color, then it's a pretty big signal that it's going to be going in the direction of the second three. Is explored price to the upside and to the down. I'm sorry, in this case it went downside upside first, and then the next candle went upside and still couldn't get any exception. Once you see that wick forming, you know that it may be time to enter. We did enter here, not on the double three, but with the lower high underneath this. If we go ahead and bring up our, oops, yeah, this chart will do. Actually, this one is not what I really want. Oops, come on now. Here we go. So we had the opening print right here at 25.48, overlapping with the overnight high. So, we knew based off of our rules, anything lower highs underneath opening print, we're looking to get into puts. First target being our 4-hour markers that we have, or any substantial points of control. In this case, the week flip and the quarter flip came before any of our 4-hour markers. Right here is the previous high day and the 4-hour trigger to the upside. We, again, gapped up past those. So we had to use these, which we've been using for a while now, which we've been calling out because they are strong points of control. And we did end up ultimately bouncing off of the week flip. So it tried to flip the week back red. Fortunately, it was able to pop back up. We did exit most of our half of our puts down here. We held half, and I don't know. We'll do. And we would have to double check our trade log or the X. I think we actually exited here on half. On half of our puts. Yeah, that was what it is, because this was the higher high here. We went down. We exited once we got up in here and got a higher here. We exited another 50% of those, so 75% of our position was gone. We held those until we got the higher low here again, and once we got this, it broke above this point here, we sold the rest of our puts. Again, follow us on X. You can see our real-time updates about our entries and exits. So we did still have this monthly downtrend line that's in play, this daily downtrend line that's in play. This is a daily broadening formation, and the week and quarter flip are still acting as support, right? So let's zoom back out and go to the day. And we can see that, again, support here with the week and quarter flip along with the month, hasn't gone. We did go full time frame continuity to the downside, just briefly here and here, yesterday, and then I think this was Friday of last week. So it did try, and it even tried filling this gap. It dipped into the gap on Friday, but it has held as support, which holds up. If you just look to the left of the charts, we've got this area of support right here, right? So it makes sense. And instead of making a lower low, we got the lower high. The higher low on the day with a higher high. So again, we're flipping the trend back to the upside. From the week perspective, we're still inside, right? So it's still a 1. It's still inside of last week's price action, so it hasn't made a decision. So anything, month, even our August 15 calls that we do have left that we're swinging, don't really need to make a choice on those quite yet. It's getting close, especially tomorrow. I usually like to be out at least a week before, but we're inside, and one of the rules of the strategy, you don't make a move on an inside bar. So may end up being forced to make a choice at the end of the day tomorrow. We'll see how price action takes us, but for the contracts that we have that are past August 15th, we don't need to make a choice on those yet from a week perspective. We haven't got a lower low on the week. We have not got a lower high yet on the week. So it hasn't even started a weekly downtrend yet. It has not continued the uptrend yet because, this isn't a higher low just yet. We haven't got the 2 up to lock in this higher low. So again, from a week perspective, we're just moving sideways. I wish it could give you more, but it looks like for the time being, at least, that we could go back up to the top of the range that we were in. Remember this 24 to 28 range that we've been in for what's this, 1, 2, 3, 4, 5, almost 6 weeks now, right? So early June we started this range. Kind of did a look below. It looks like we're going to do a look below and fail. Don't know that we're going to get the 3, 2 down, 2 up on the week. Even if we did, the magnitude isn't very far, so wouldn't expect too much from that if we did. It's not like we would just jump into longs, but if we broke higher, that may be our signal to jump in longer term contracts, or add to, or if you don't have any yet, then jump into some. Because at that time will be full time frame continuity to the upside. Okay, so if we look to the upper left hand part of the chart here, we've got the week, the month, the quarter, and the year. They're all green right now. The year is not yet flipped green. It did briefly a couple of weeks ago, and then the week before, but we're trying to get back to where it's full time frame continuity green. At that point, that's when you get a lot more confidence in going longer. Possibly breaking this weekly broadening formation that we're running up against. At that point, we're handily above this monthly downtrend that we've got, and again, this resistance of the year flip that's been a resistance for about 4 weeks, 5 weeks now. So we get up there in full time frame continuity to the upside, and we may see the market kind of take off, especially to at least hit this higher high on the day chart, 3264. If not this, I'm sorry, this is on the week chart. So we do have a gap up here, a small gap that could be a magnet. Not saying it will be filled. If it did, it wouldn't be a surprise either, because our next weekly broadening formation isn't until up here. We don't have any monthly broadening formations or quarterly broadening formations because of the price action that we've had previously. So the weekly broadening formation is the only thing to look at really. And so if we break this weekly broadening formation, that's the next one we're looking at as resistance from a longer term swing perspective. So I guess that's enough zoomed out right now, because it gets into a lot more speculation. A lot of people are here for the daily trades and things of that nature. So let's get back into the smaller time frame. We already kind of went through what happened during the day. Just a review of the market internals. If we bring them up side by side, the upper left hand chart is SOXL. The upper right hand chart that we have here is the tick. Literally how many stocks are ticking up as opposed to ticking down. Again, these internals are for QQQ, but a large weight of QQQ is semiconductors. So we do like to use it as another tool in our tool chest. We don't make trades based off of the internals by themselves. They have to be the internals combined with other things that we look at, other triggers that we have in order to use them. But they do come in very handy, especially on a day like today. You can see vol QD. It did open up in positive territory, but not very high, right? Trend higher zone is way up here at 400 million. We're not even close, right? It's, what's this, 12 million, sorry, 12 million, as opposed to 400. So that's really not high. And it just slowly trended down most of the morning. You can see price action trending down most of the morning. This is the even better look at it, because this is the breadth, ADQD. So the breadth of the QQQ, this is how many. Are there more stocks going down in price than up in price? That's what happens when you're getting the decline. So we had a lot of stocks declining in price. Started in trend higher zone. That's understandable because we had the gap up, but it immediately started going and didn't look back until about 12 or 11 o'clock, and even that was just this little push up right here for the lower high on the 1 hour. So it continued to push down. The day continued to push down. Tick was under the zero line most of the day, so that's what gave us the confidence. Not the only thing that gave us the confidence, but we had lower highs and lower lows to continue giving us confidence. But this was another part of our confidence in staying in the puts today until the bottom, where we kind of bounced off of the quarter flip, or the week flip. I'm sorry. So just another, like I said, another tool in your tool chest that you can use. I already showed the how we kind of used our 4-hour markers. They didn't really come into play too much today, other than our confidence in staying in the put, right? Because we called this out specifically on X today, when we got the higher high, higher low on the 15. we knew that more often than not, you have to create, just like you have to create an uptrend on the 5 minute to get a higher high on the 15 minute. You have to create an uptrend on the 15 minute to get a high, or not necessarily a higher high, but a high on the 1 hour. So we had this push up, got the higher high on the 15, but we stayed in because we were still below opening print as the main reason. But overnight high was there. If we bring in the fibs on the week, this purple dashed line is the 50% of last week. This yellow dashed line is the 50% of last quarter. So you had all of this resistance here that we would have to fight through. And we called this out specifically on X today. That's why we stayed in these puts underneath opening print. And then if you look at the 1 hour, boom, we got the lower high, right? So we stayed in them. It stayed below these. As long as they stayed below these, we were in them. It's made the lower high, and then that's when it went to make the low of the day, right? Which almost hit the trigger of oh no, that's from the previous day. This old chart wasn't updated yesterday, but it just goes to show, the the other resistance that we had up here, to remain confident that this is probably going to be a lower high on the 1 hour. You know what I mean? Combined with these internals, going down, staying below the zero line. So it just gives you the confidence to stay in. That's how we can use the markers that we have out here. And again, these fibs that we have that we don't usually look at too much, we bring them out every once in a while just to make sure that we're seeing everything. And again, those fibs are in our video about how we set up our charts. Those can come into play, right? And so we called that out today on X in real time. So let's go ahead and get into the triggers and targets for tomorrow, the end of the week. We want to go ahead and, let me get my other charts. We want to go ahead and not only set up our triggers and targets, but we want to grab the expected move for tomorrow on SOXL. To do that, let's go ahead and set up our notes. So duplicate notes. We'll make this one Friday, and this will be August 8th. There will be 98 trading days left in the year starting tomorrow, and these notes are from August 7th. Our close price was 25 flat, which was like the overnight high 2 days ago. We're green on the week because we're over 24.59. So we need to make that red. So it goes red at 24.59. Remember yesterday we were red on the week. Today we flipped it back green. So at 24.59 the week would go back red. At 23.57 the month would go red. We'll go ahead and flip that because we're above 24.38 now in the quarter. So at 24.38 the quarter would go red, but we're still not green on the month. The year. The year goes green at 28.13, right? So we had our expected move already marked in from Sunday of $3, which topped us out at 27.08 and gave us a bottom of 21.08. Again, that's just an expected move from the market makers. We can easily go above or below that. We've done it many times. It's just a guide to where general price action would be, and then you can use further price action throughout the week to determine if you're going to break out of that expected move or not. So let's go ahead and get the expected move for tomorrow, the 8th. So to do that, we want to go to our options chain. Come on now. Make this wider. Trade. All right. So our options chain for SOXL, we see August 8th, 2025. Over here we have the market maker's expected move, which is $1.09. All right. So $1.09, we can call it $1.10. We'll be precise. We'll give it $1.09, right? So the high will be 26.09. If I can type, and the low would be 23.91. Yeah, I think my math is right there. Okay. So tomorrow we have an expected move of 26.09 to 23.91. Sometimes we put a little box out there on the chart to show us where that would be, but we'll kind of leave that out today. Leave the chart not so messy. So let's go back to the chart and get our 4-hour markers in here. Oops. All right, so first thing we want to do, let's go to the 4-hour, and we want to mark the previous high a day, the 4-hour trigger to the upside, the 4-hour trigger to the downside, and the previous low a day. So we'll move the previous high a day from yesterday's high to today's high. We'll take this 4-hour trigger to the upside and move it to the high of the second 4-hour of today. We'll take the 4-hour trigger to the downside and put that on the low of the second 4-hour candle of today. And we'll take the previous low a day and move that to today's low, which is also happens to be the low of the second 4-hour candle from today. So we've already got those moved. Let's go ahead and we'll do it on the clean chart as well. Let's get rid of opening print. Let's activate our previous high a day, move it up here. Take our 4-hour trigger to the upside. If you notice my last chart, we didn't update yesterday. We only updated this one. So activate our 4-hour trigger to the downside, move it to the low of this, the second 4-hour candle, and then move the previous low a day, oops, come on now, to today's low. So if we zoom in here a little bit closer on the 15-minute, we can see how it can all play and make sense, right? We've got the week flip, previous low a day, 4-hour trigger to the downside, and the quarter flip. Those are going to act as probably a support tomorrow, right? They were resistance here 2 days ago. We gapped up over them today, basically. They were support here 3 days ago. They were resistance 4 days ago. Support here 5 days ago. So this area right here is going to act as our support. Anything above that, we're looking at, we're going to trigger to the upside, the 4-hour. If we open, inside yesterday's range, below the close of yesterday, then we're taking anything that goes above there. First target is 25.48, so a good 33-cent move. The next target would be previous high a day, so another 40-cent move, so that's 73-cent move. On SOXL, if you're loading up on contracts, that's a pretty nice little profit today. If we looked at today, we had the early calls that we stopped out of for a very small loss, but then we took all of this action to the downside using our rules, using the 4-hour triggers and targets, and this little loss in the morning was nothing at the end of the day. We made a very nice profit at the end of the day. So we also got the bounce where we wanted the bounce. So our swings are still in decent position as well, right? So continuing to just claw back at those calls, scalping puts at any time that we can, knowing that most dips are being bought in this market right now. So until things change, keeping in the back of our minds, we do still have seasonality creeping up. We're in it, starting it right now. August, September, October, traditionally not the greatest performers for tech, but last 5 years, August hasn't been such a pain for tech. It's been mostly more September, October, but you don't want to forget about August. So we still want to keep that in mind, still being ready for puts, still being ready to sell calls, especially if we're not able to flip the year back green, if we're getting pulled back below this monthly downtrend line. Those are the types of things we want to think about because there are gaps to fill to the downside that aren't too far away. There's lower lows to be made on the week, which can start a weekly downtrend. So we want to be ready for the puts, but right now, we're almost full time frame continuity to the upside, and we're looking like I said, we're still in this market where people are just buying dips. So until things, we get that lower low on the week, or we get a lower high on the day followed by a lower low, and maybe another lower high to start a real downtrend on the day chart, then that's when we start thinking more about puts on a swing perspective. But for right now, we're just scalping puts and buying calls on the bounces. So you can see where those would line up tomorrow. Ideally, you get to open below yesterday's close. That way you get to get in on the trigger and you get all of the first move. If we only get the first move before we pull down, if we get the full second move, then you've got that bigger move. Anything else is cherry on top, right? But that's just how our trading method goes. It's very simple and very easy to if you stay disciplined to follow along with. You know, it's not 100% win percentage. It's not about that though. It's about taking great risk to reward, capitalizing on the contracts that do go in your direction, making sure you have enough contracts to make you know, decent profit, you know, good profits. They're cheap enough contracts, so it's easy to load up on them, even at the monies and in the monies. You know, we had an at the money call in the morning because it was risky on the gap up. Are we going to gap and go? Are we going to fade the gap? That's why we didn't go in the money. We were at the money. Not one strike. Just one strikeout, not more than one strikeout. But then on the puts, we were bought in the money puts, 23.5 puts. So as soon as they got cooking, they got really cooking, and we got great theta on those contracts as well. We don't buy the same week; we buy 1 week out for scalps, and that gives us a little bit more freedom for the pullback, so that we can go through something that like that higher high on the 15 to make that lower high on the 1 hour, right? So just keeping all that in mind. Let's get to the triggers and targets because I know that's what everybody's waiting for. So if we look at from the 4 hour perspective, if we are to make a continuation to the downside that started in the morning today, it would have to go 2 down again, so below the low of basically yesterday, but the low of the second 4 hour candle, which would be a 2-2 continuation, but in the bigger scheme of things, it would be a 2 up combo 2 down, right? So this 2 down combined with the, you know, if tomorrow goes 2 down, those 2 combined are just one bigger 2 down candle on this 2 down. The magnitude of this 2 up combo 2 down is the low of this candle here, so you're probably going to need a combo 2 down to get to that low, if you're going to get to that low. So if we do go 2 down tomorrow on the 4 hour, it is a 2 down on the day as well. This low is 24.53, and since it is the low for the 4 hour and the day, we'll go ahead and put it in the day. This would be a 2 up combo 2 down. We'll just mark it as what it is first. That way we're not oblivious to what it is, right? But it's not like a 2-1 2 down. So a 2-1 2 down would probably give me a little bit more confidence in entering on that, because it would be a strat, you know, reversal and not just a continuation. This is just a continuation to start out the greater reversal, so it's not like I wouldn't still have confidence going into it, especially if, you know, we're sticking to our triggers, and watching everything else out that we've talked about earlier today. You know, if it triggers it, then I'll still have confidence getting in it, but it will start as a 2 down extension, not as much force behind those. But, you know, if the internals are just tanking, and, you know, we have some type of whatever that just sends the market down, that, you know, then you can still have confidence in the 2 up combo 2 down. It's just that magnitude is very far down. It would be a lower low after a higher high, so it would be making a broadening formation. So it's got to make it through all of this support. It's going to be a hard move to make, but it still can be on the board, right? So we have that trigger. The first target would be obviously the close of the gap. This is the high of this candle is 24.12. So first target would be 24.12, right, for the gap close. That's obvious. But the magnitude of the 2 up combo 2 down is the low of this candle right here, which is at 22.95. So we got 22.95 in there. Take that extra higher up there, right? So we've got our trigger, we got our first target, we have the actual magnitude of the move, and then we have some extended targets here, 22.57, 21.98. They're still in play because of, you know, the action that we had today. Even though it gapped up, we pulled back some. So those targets are still in play. We don't need to go through trying to make those. We don't have to go through and make new extended targets. We just leave them there. So now to the upside, we would get a 2 down, 2 up, and it's a failed 2 down, right? Because it's a green hammer. So it tried to push down, and not only did it push back up, but it pushed back up above the opening. The opening print in the case of the second 4 hour candle. It pushed back above where the second 4 hour candle started, and we're a green hammer, right? So that's pretty bullish from a short term perspective. If we break that to the upside, that's a 2 down, 2 up, meaning the trigger is the high of this candle with the magnitude of the high of this candle. So the trigger is 25.15. 25.15. The magnitude is 25.88. If I can type 25.88, right? We've got some extended targets of 26.04 and 26.74. The reason why those come into play, 26.04 is the 50% of last month. And then if we look at last year's run up, this 26.01 is right by that 26.04 as well. The 78.6, that's the 78.6 fib of the 2020 run up. I'm sorry, 2024 run up. If we zoom this in, let's go to the week chart, right? So we can get it in here. If we look at the 2024 run up, it started in 23, but if we look at that bottom to top move, we got a 78.6 fib that was support in the end of 2024, which we ended up breaking and is turning into resistance right now on our move back up. So 26.01 is still a major point of significance. That's why we got it up there. And then, oops, let's get the right chart up. Zoom back in here. So we're looking at a 4 hour. And then the 26.74 was an extended Fibonacci, Fibonacci extension that we had pulled out. That's not on the chart anymore, just so the chart can be a little bit cleaner. But that's where we got the extended target from on there. And if you look out, let's see, 26.74, yeah, it ended up being the top of this candle here anyway, which if you look on the day chart, which we'll flip to next, that is, back into the middle of this range here, this 24 to 28 range, right? So looking at the day chart, let's take this, and we've lost the weekly uptrend, so let's remove that. So just looking at the day chart, we would have a 3 2 down 2 up, but we're getting a 2 up 2 up extension because the 3 down 3 2 down 2 up is already fulfilled. So it's not like it would be a 3 2 down combo 2 up. It's already fulfilled that. So we're just treating this as a 2 up 2 up in this case. So it doesn't have a magnitude because it's not a reversal. It's just a continuation. So all we have here is targets. So we'll leave our extended targets from the 4 hour, which turn out to be fine on the day as well. The 26.04 again is the 50% of last month. 26.01 is the 78.6 of the 2024 run up, and then the 26.74 is the high of this candle here. This candle, I mean, you could say this could be a 1 combo 2 down, combo 2 up. Getting kind of congested there, so I wouldn't really call it that. I'm just looking at that as an extended target. If we go higher, again, cherry on top, but it's that would be plenty of a move in SOXL. We're looking at in after hours we're up 13 cents. That's up 0.5%. So it doesn't take that many cents in the underlying ETF price for a large percentage move in the triple leveraged ETF, right? So let's just keep that in mind. Don't need the biggest moves to make good money, right? Looking at the day from the downside, it would be a 2 up 2 down. Again, first target would be the gap close, which is this 24.12. So we'll put a target in here first of 24.12 because again, dips are being bought right now. So we want to just be aware of that. Our first at least target would be here. The magnitude would be the low of this candle, 22.95. So, I mean, you can still hang in there past the initial target. We probably will, especially if internals are looking right. If we're still getting lower highs and lower lows, we'll hang in there, right? But the full magnitude past the initial target is 22.95. Anything past that, again, is a cherry on top. Let's look at 22.57 is the top of that gap where we bounced, so I'll probably use that first as an extended target, and then the gap close here, which is 21.98, right? So those are our triggers and targets for the 4 hour and the day. The week, we're still an inside week, right? We haven't triggered the downside, 3 2 down 2 down. we haven't triggered the upside. 3 to 2 down, 2 up. So 25, the trigger to the downside is 22.57, upside 28.16. We're basically in the middle there. I wouldn't be surprised if we end the week in inside week, one candle. The expected move isn't huge, $1.09. So $1.09 isn't gonna. If we stay within the market maker's expected move, we're not going to be anything but an inside week this week. So just keep that in mind. So that it shows indecision, frankly. Weren't able to break to the upside or downside. So it's more sideways movement from the week perspective. Wish it was something else, right? Because then you could, really start putting, more getting heavier on your contracts, going longer out in expirations, things of that nature. Not to say you can't do that now, right? But, if you're moving sideways under a major resistance, a monthly downtrend line, this year flip, and the weekly broadening formation, you want to kind of temper it, right? We have January and 2026 and January 27 contracts out there that are up, and we haven't added to them, but we haven't sold them either, right? Because we're just in indecision from a week perspective. Haven't made any lower lows, haven't made any lower highs yet, even at that point. So we just want to hang in there. Just keep playing. We're doing, like we said, we're doing a lot more scalp and day trading than we normally do, but that's just what the market conditions call for right now. If you want to make money on a consistent, day-to-day basis, right? Realized profit. If you're okay with unrealized profit, you can be in those longer trades, buying at the money or in the money calls for longer periods of time, and you can have real unrealized gains, and that can be good as well too, because eventually they will be realized, especially if you play it right. So, if you're looking for these steady realized gains, you're gonna have to do a lot more scalping and day trading, which might take a little bit more of your time monitoring the charts, but that's why we try and put the information out on X that we do. So make sure you're following us on X at Bullish Chips, and that you'll get all the information that you need to make some informed decisions. Well, not all the information you need. You do need to do your own research, but we try and put out enough information that, when combined with your own research, makes it very easy for you to make plays. Right? You make your own decisions, but it makes it very easy for you to make decisions. So hang in there. The market will make a decision at some point. I hope everybody is, getting some scalps and day trades in, and getting that realized profit throughout the week like we are. Again, it's not about 100% winning percentage. It is about having a winning percentage, but it's about your risk to reward. Not entering anything that's less than 2 to 1, and staying in your winners, cutting losers quick. The usual cliches that are the hardest things to do sometimes, but you follow your rules and you end up making profit. So it was a great day for us today. Continue to add to the wins for the year, and just trying to watch how price takes us. So get you some rest tonight. Last day of the week tomorrow, Friday. We do usually trade a little bit lighter, but if something is there, we'll jump in it. And we'll continue to keep everybody informed as much as we can on X. Make sure you hit the like button on this video if you liked it. Again, it really helps us grow and help other people find out about SOXL, because I'm sure you enjoy trading it as well. So everybody have a good night, and we'll see you trading tomorrow.